My name is Kris Kovacs. Welcome to the Fintech Combine. This is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Kevin Martin, who leads strategy at SchoolsFirst Credit Union, the third largest credit union in the country. So if you're ready, let's suit up and get out on the field. Kevin, it's so great to have you back on the podcast. Thank you very much for joining us. For those who don't know you, why don't you start off by telling us a little bit about yourself and what you do for a living?
Well, Kris, thank you for having me back again. I guess I didn't mess up too bad the last time we worked together. I have been working in the credit union space for now 12 years, and all of those years have been with SchoolsFirst Federal Credit Union. SchoolsFirst serves school employees and their families throughout the state of California. It is the largest credit union in the state of California and the third largest in the nation. And I've had the pleasure to serve the organization leading strategy from $7 billion in assets to $34 billion. And I think we've learned quite a bit in that journey.
When did you guys take spot number 3?
That was in the last quarter.
In the last quarter. Congratulations.
Thank you.
I'm super interested in talking to you about strategic planning because we're headed into a season, right, where a lot of credit union boards and leaders are going to be talking about planning, talking about laying out their strategies, evaluating their strategies going forward. But by SchoolsFirst becoming the third, that means you guys have had some really impressive growth, right? And not a lot of credit unions are seeing that right now. Is there something in particular you would attribute that growth to?
Absolutely. Yeah. So we attribute our growth to, I would say, 2 major things. The first is we focus on the member. That is our primary focus when we make decisions. It's what's best for the member individually, what's best for the membership, credit union wide. And the second, which is interesting in our space, is that we're focused on a particular segment as opposed to being focused on the larger, broader community. And why that's really important is that it allows us to create products and services and develop strategies and marketing communication that's targeted to one particular segment, which is what strategy is really all about. It's like what you're going to do, but more importantly, what you're not going to do. And so by us being a tip charter, it removes a lot of the noise of trying to be everything to everyone, and we can just be great for one group of people.
Has that been the strategy of SchoolsFirst all along, this very focused approach to looking at the larger market? Because it's the opposite of what a lot of credit unions are doing right now, right? A lot of credit unions are expanding their membership pool, moving beyond single segs. How long has that been the strategy to get the results that you're seeing today?
It's been the strategy at SchoolsFirst for 91 years.
Oh. So you're just getting started. That's what you're saying.
That's the first quarter. We're off to the next quarter.
There you go.
Since the very inception, we've only served school employees and their families. We quite literally, although we grow 110, 120,000 members a year, we turn away thousands of people due to ineligibility. So I think it's a special club to be a part of, in large part because of the team, the way that they treat every single member, they advocate for every member, they try to listen to the individual needs of every member, and to help them deliver on their financial dreams. And that goes a long way when somebody asks you, who should you be working with as a financial partner? Our members are our biggest advocates, and it's beautiful because we're their biggest advocates. And so it's a nice virtuous cycle.
You are adding the equivalent of a large credit union every year, 120,000 members. That's tremendous. Does that require a special level, a special attention to detail when it comes to thinking about what your strategy and planning is going to be?
Oh, yes, absolutely. What it does give you is a great deal of data to understand when you are performing well, and probably more importantly, when you're not performing well. And I think the toughest part is not surfacing all those different opportunities. The toughest part is how do we as a collective leadership prioritize what we're going to focus on? Because when you start to be, 3,000 team members and you got 1.5 million members and you got 70 plus branches across one of the largest states in the country, there's a lot of opportunity. There's a lot of things to invest in. There's a lot of services to improve. And the key is for us all to be on the same page, singing from the same song sheet. That's the challenge. And I love your distinction that we're going to get into of what is our strategy versus what is our planning cycle and how does that align with our strategy? Because those are very different things. And they're both challenging, but I would say the planning piece is probably where the lion's share of the effort is.
Okay. So let's talk about that difference then. What is the difference between, because we mix it together, right? We call it strategic planning, right? So what's the difference between strategy and planning?
Yeah. So strategy is the exercise or the art of understanding your context and clarifying what you want to be when you grow up and how you plan to get there. Planning is a collective exercise where you have multiple parties involved with various ideas. And so you need to center them around some limited number of strategic priorities. And then you must have some type of methodology to, at least in our situation, score those ideas. Because I can give you an example. We just went through our planning first step, which is the intake process. So we open up our intake form. This is after we've had discussions around strategy and where we're going and what we want to be when we grow up. And then we open up the form to our entire senior leadership team, which is 20 plus individuals. 122 items were submitted.
Wow.
We have 73 things we're working on this year. We expect 26 of those to go into 2026. So now you have to figure out how do you, keeping your strategic priorities in mind, make sure you have enough resources for the 26 things you already signed up for. And how do you filter through the 122 to get it down to some reasonable amount of initiatives that, one, supports our objectives as an organization, and make sure that we're prepared for the future, addresses all the regulatory challenges and requirements, the infrastructure, maintenance needs. That entire process is the planning process, right? It is the blocking and the tackling of the actual game, as opposed to strategy is the assessment of the competition, the environment, the technology, and clarifying what we want to be when we grow up. So the strategy is really forward looking. The planning is trying to sift through all the different plays that we could run and figuring out what our game plan will be.
Are there, my recollection as the CIO for a credit union was that this time of year, it was, basically Christmas for executives, right? They would all come up with their Christmas list of things they wanted, right? You call it 122 planning items. I would call it a Christmas list, right? Is there a process that you guys go through to help the leaders differentiate between what they need and what they want?
Yeah, absolutely. And so we just went through a planning transformation last year. And so we're actually building it and adopting it this year. So we're going through a major transformation because we identified that our planning process that we had for 10 years wasn't going to be enough for a 30 billion plus shop, right? So we had to revamp it. But yes, part of the process is the start of our planning process is for our executive team and our board to set what our strategic priorities are for the next 3 years. And so we have 5. And so once those are set, those are meant to be an anchor, right? So we want our executives to go into their individual ideation process thinking about these strategic priorities. And that is an attempt to make sure that we're all thinking in the correct direction and not going in different directions, right? So for example, I'll share one of our priorities for 2026, and it was for 2025 as well, is self-service empowerment.
Mm-hmm.
So we have more and more members that are picking up that mobile device. That's how they want to engage. And I'm sure we'll get into societal trends here in a moment. But in our current situation, you can do 35% of what you can do in a branch, you can do on your mobile device.
Mm-hmm.
So we want to close that gap.
Gotcha.
And so by sharing that strategic priority up front, now when our lending team, our membership development team, or even our digital team, when they are ideating, they're thinking about, okay, what can the member not do on mobile or online today?
Mm-hmm.
And what do we want them to be able to do? And that hopefully informs their submission into our planning process.
Okay. So that way then you at least know that we're all rowing in the same direction and somebody's not over there, pursuing some crazy
Let's be
non.
clear. There's still ideas that are way over there as you get better and better. But the second part of the process is after you go through intake, there's a scoring mechanism.
Huh.
And the scoring checks to see how well aligned this idea is with our strategic priorities.
Mm-hmm.
It also speaks to how ready is this idea. Some ideas need to be developed. They're just ideas at this point. There's no clear plan of how to implement yet. And we try to distinguish between those two.
Okay.
So we have an innovation portfolio for idea development and exploration. And then we have things that are all about implementation, where we may be in the ideal state, we've already negotiated a contract, right? But we just haven't signed it yet because we haven't committed to it as an organization.
Right. So talk to me about the innovation portfolio. So these are when somebody does come up with a crazy idea and they throw out something like AI, right? Oh, okay. Well, let's go talk about what that means, right? What you're talking about. Is the output from that a business case? Is it a plan? Like how do you know when a crazy idea is ready to enter the planning arena?
It's like you've been through this cycle before, Kris. That's a great question. So our innovation portfolio has at least 3 different approaches that can lead to 3 different outputs. So the first could just be strategy development. So you just mentioned AI. Mm-hmm. 2 years ago, we decided we needed to develop an AI strategy. Are you getting paid for that Coke advertisement? Or
Diet Coke, or as some call it, a fridge cigarette? No, I have not yet been sponsored by Diet Coke.
But we are here for you if you want to call us. I'm sorry, I digress.
We're going with that. We're keeping that in. Don't cut that, Anson.
The innovation portfolio could be around strategy development. So we developed what our AI strategy was 2 years ago, right? Another method or approach in our innovation portfolio is vendor vetting, right? If we know that we want to do something, but we need to assess those vendors, we try not to do that in the implementation of an initiative because it adds months, if not a year, to the process, right? So you have the RFP. First of all, you create your requirements, hopefully. And then you go out to the vendors and you see how close they can get to your requirements. And there's a huge discussion around pricing, as you very well know. That can take at least 6 months in the contract negotiation as well. And then the final and probably the most interesting component of our innovation portfolio is our test and learn approach. Mm-hmm. So that means we have already developed a strategy, or at least have a working strategy. We have an idea about a vendor, but we're not sure we want to implement with them yet. Mm-hmm. So we want to test and learn, which for us means it's going to be a proof of concept that is a minimum viable product that we can put in front of a limited number of users, whether it be members or team, for some temporary period. And that's what we also did with AI. AI went through all of these phases. So we developed an AI strategy. We went through some vendor vetting. And last year, we decided to do a proof of concept with Posh. Shout out to Posh, our call investment. And we created an internal chatbot to help our team members get answers to questions faster.
Right.
That was a huge success, right? It was meant to be a 3-month pilot, ended up turning into a 3-month proof of concept, ended up going 4 months. We usually, at the end of that, we have success criteria to decide if we want to implement. It was such an astounding success. We decided to implement immediately. So we almost rolled directly into a full credit union wide implementation. So we went from 200 users to 3,000 users in 6 months.
Wow. Shout out to Posh.
Shout out to Posh.
That's good. That test and learn phase, is that where you would typically engage fintech? Is that the approach that you would kind of introduce a fintech to the organization? And at the other side of that is, do you test and learn product changes as well, or is it focused around technology providers?
That's a really great question. So the way we framed it thus far, we've been doing test and learn for about 3 years, maybe 4 years now. And the way we framed it thus far, it's about emerging technologies that we think could have operational or strategic benefit, but we're not sure yet.
Okay.
That's typically how we approach this. When it comes to a product change, we have volunteer cohorts that we consult along the design process. So we're listening to our members to understand what they need and what they want. And then we may go off and do our homework, and we come back to these volunteer cohorts to ask them for feedback on the design.
Oh, okay.
But once we know that we are going to do it, we typically, it's full steam ahead, but we usually have a pilot before we roll out to the entire membership. Okay. So, we have 1.5 million members. We may do a pilot with 100,000. And that pilot could last 3 months, 6 months, 1 year. And we see what the adoption is. We see what the feedback is. We see if it was broke or not and fix those things. Right. And then roll it out to the larger membership.
So using the data, the feedback that you get to improve the product and make it even better.
That's the intention, yes.
Does that product management process, is that represented in the planning process as well? I mean, I guess it would have to be. You're dedicating resources to it, right?
Yeah, absolutely. So, if that product management change is aligned with our strategic priorities and it got prioritized as a part of the plan, then yes, that's how you get resources. That's how you get money. And the only distinction becomes in how you want to go about doing it. And so we've been figuring out over time, but the test and learn and the pilot of new product and services, those are becoming staples in our implementation process.
One of the, if you going back to the implementation portfolio, one of the challenges is, the old adage is it's going to take twice as long and cost twice as much as you expected, right? How do you create? Is there any kind of elasticity you plan for as you're aligning and choosing which of these projects you're going to do, to ensure that overall you're able to meet the schedule and expectations of the organization, because instead of kind of like stacking request after request after request after request?
Yeah. Well, let's be clear. It's an art, not a science. So if you're frustrated with your process, everybody is. I think that's just par for the course when it comes to the planning process. However, in my observation and over my 20 plus years career, the issues of delays or it's taking twice as long or costing twice as much is a result of going from idea to implementation too quickly. So like somebody saw something at a conference, we should do this, they submit it, and then people started to work on it, but they don't really know what it is yet. That is in part why we created the innovation portfolio. I'm trying to create a space where we can vet ideas more deeply. when you go from idea to implementation too quickly, you end up doing things in the project that you could have done before you started the project. The big one for us, at least, is contract negotiation. I mean, that literally can derail a project timeline like nothing else, right? Because we made assumption, oh, this is going to be great, let's do it. The lawyers start talking to each other. 4 months later, we finally get something signed, right? The other component is technical compatibility, right? So, a leader may have saw this and thought it was great because he worked at another credit union or a financial institution. However, our technology stack doesn't jive with their technology stack, or maybe they are not compliant to the level that a $34 billion shop needs to be compliant. And so when that happens in the actual project, it can take a couple of months to get that clarified, when you could have done that before you started the project. So when you start to remove some of these long duration delays out of the actual project, and you create a space to just have those conversations without the pressure of implementing something that's going to go to the entire membership, now when you actually get to the implementation stage, you do it with a great deal more confidence and clarity on how to approach it. Something that I'm not sure we realized before we started, when we do test and learns, because we are standing up a minimum viable product, it has to go through at least a lightweight or a JV version of infrastructure compliance, regulatory compliance, security, and all these things. And you also, in implementing it, you learn from members and or team what was clunky about the test and learn rollout. All of that information makes it so much easier to fully implement when you get to the implementation stage.
Yeah.
So our former CEO used to make this comment, and I'm sure it's not just attributed to him, but measure twice, cut once. And by having our innovation portfolio, it allows us to measure twice and cut once. So we start to remove some of the delays in the implementation process. So hopefully, there's always going to be delays and cost runs, but our method hopefully minimizes them.
So how do you said the process starts by setting the strategic priorities, right, for the next 3 years. Walk us through a little bit about how you do that. How do you look at the environment today? I mean, things change so quickly, right? How do you look at the environment today, and how do you create how do you propose, I would imagine, and then ultimately gain acceptance of what those strategic priorities ought to be?
Yeah. So maybe we should talk about our process for strategy development.
Sure.
And so you
Go
can
for it.
see these comments in the context of the process, and then we can go deeper into this first step. So I call this model a smart strategy model, and this has been developed over years, and it attempts to make strategy very simple, but at the same time very robust. And so there's 4 phases to this framework, or to this model. The first is context. That's the why. The second is objective. That's the what. The third is strategy. That's the how. And then the final component are the actions that you take. So let's walk through each one of these. So context is the why. So why do you need to change anything? And so we start with the conversation, hopefully with the entire executive team, or those who understand the business the best, and could also include some external consultants or experts. But we want to understand, okay, what are members asking us for? What do they need? How are members behaving? How are members behaving? Where are they headed? Where do we see the most activity? What's the competition doing? What emerging technologies do we need to be aware of? How's the regulatory environment changing? So you start to understand that there's a lot of different components here, but once you put them all on the table, and the CFO may see things different from the CIO, may see things different from the chief administrative officer, but they're all in the same room, adding to this jumbo of context, right? And so now at least we have a common understanding of the business environment that we're operating in. So part of that process and what I can try to contribute to that process is we do projections of member behavior and transactions in around 30 or 40 different metrics. We go out 5 to 7 years.
Mm-hmm.
And it was based on the last 10 or 12 years of data. And so like for us, just give you an example, our online banking users are steady state, right? We're growing 6 to 8% in membership a year. Active online users, 2 or 3%.
Mm-hmm.
Right. Our branches continue to grow. 7 and 10 new members continue to come through a branch for here at Schools
Wow.
First. However, the frequency of going to the branch is declining.
Mm-hmm.
Right? So a lot of members use the branch every single year, but a few years ago, they would go to the branch 9, 10 times a year. We expect it to be more like 6 by 2030, right? Based on current projections. Mobile banking is outpacing branch usage.
Mm-hmm.
So we have more and more members using mobile banking, and we expect that to be 1.2 million members using actively mobile banking by 2030. So once you have that type of context, and then you start to understand what I mentioned earlier, the service functionality, the gap between what you can do in mobile versus what you can do in branches, you can do 35% of what you can do in branches in mobile. Now you have a rush of members going to a channel where they can do less.
Mm-hmm.
That's problematic, right?
Yep.
That whole discussion led to the strategic priority of self-service empowerment, right?
Mm-hmm.
Not to mention that half of our members are younger than 45 years old. Not to mention when we look at our engagement data, our branch satisfaction is much higher than our digital satisfaction. So there's a lot of things in this conversation, but you try to distill it down to a strategic priority that allows our organization to focus the planning ideation.
So what's interesting about what you just said, and I think really kind of drilling into the role there of providing data and projections about the context, right, is there's a lot of credit unions who want to rush to mobile as a way of reducing their costs from a physical facilities perspective, right? That's not what you're pursuing. You're saying, listen, come to our branches, open accounts, be interactive with us, use us as a retail location,
Yes.
right? And when you're ready to find servicing on mobile, we'll meet you there too.
Exactly right. We call it channel of choice.
Yeah. So, okay. So your first phase of the smart model is context, doing projections. Here's what's going to look like. Here's what we need to be thinking about.
Yes.
How does that then feed the objectives?
Yeah. So the idea here is, are we comfortable with the context, or are we not comfortable with it? Right. Right. So like if, part of the context too is we're growing 8% a year in membership. We're comfortable with that. We're good. That's great. That's beautiful. No action necessary.
Yeah.
Part of our context too is payments is outpacing membership growth. Debit card growth is outpacing membership growth. Zelle transactions are outpacing membership growth. You name it. When it comes to the payments arena, our members are moving money in and out. They're paying for things. Yeah. They're engaging. They are very active.
Yeah.
One of our challenges is, Zelle is expensive for us.
Mm-hmm.
And it has double-digit growth every single year. And every time I give a projection, I'm wrong. And I'm wrong to the downside for the last 3 years. Right? It's always above what I suggested it was going to be, which is very expensive. Right? And so when you are uncomfortable with the direction things are going in, that's where your setting priority starts to come into play.
Okay.
Right? Or you're setting goals or targets because you're like, okay, well, if this is going to continue down this path, we need to create some alternative. We need to invest some time in understanding what our options are. We need to
a less expensive alternative.
Right. Exactly.
Mm-hmm.
And so that's how that works. So are you comfortable with the context? Great. If you're not comfortable with the context, that's where you start to have a discussion. Okay, so what should we be focused on? And that leads to your second your second phase, which is setting
Okay.
clear objectives. And we
Okay.
can use objectives and priorities here interchangeably. We have distinctions internally, but I won't bore you with that. But if we're comfortable with them, continue to invest in maintenance and the infrastructure, business as usual. If you're not comfortable with it and you want to see change, then that's where we should focus our effort, and that should determine our strategic priorities.
Okay. So I've got context. I've created objectives. Next up is strategy.
Yeah. So you can imagine. I'm gonna go back to context. To objectives for a second. When you are on the executive team, you have to focus on what you need to happen. And then you need to trust your leaders to figure out how to make it happen.
Mm.
And that can be very uncomfortable for people. Everybody wants to do both.
Yeah.
Right?
Yeah.
And it's not to say, we're setting an objective and you go figure it out. I'm going to go to lunch. No, we're still figuring it out together. But we have a clear vision for 2029. We set this last year. Mm-hmm. Right? We have a vision for how many members we want to be serving, what our service levels, engagement scores will be, how many assets will be, what the income statement will look like. All those things are in great detail for 2029. Mm-hmm. Understanding our historical growth, you can see where we would actually be with no change, mm-hmm. and where we need work. Mm-hmm. So now that becomes the conversation for strategy, right? So historically, and this was under the prior administration, there was a lot of regulatory change. CFPB made a lot of adjustments and changes, and so a lot of legacy revenue for credit unions and financial institutions started to dwindle, go away, go under attack, whether they be overdraft fees, whether they be debit card fees, etc., or interchange fees. Those things started to either get reduced or get completely pulled down. So non-interest income started to dwindle and decrease over time in our projections. And so one of the things we wanted to do is how can we find services that members would want and they value so much that they would pay for, that allows us to make sure that we continue to have enduring financial strength, given the goalpost has been moved on what can be charged, who can be charged, because some of the stuff was merchants were paying for, but we'll leave Washington to what they do, but they decided to make adjustments, assuming it would get to the consumer. We haven't seen that, but we have to deal with the regulations as they stand, right?
That's right.
And so in the developing strategy, it's like, well, how? And so the discussions that we've had is we want to make money movement easier and cheaper, right? And there's multiple ways to attack that, but the discussion on strategy shouldn't be one of actions just because we haven't gotten to that point, but just clarity in how we want to make decisions, right? So we want to make it easier for members to move money. You tell us who you want to send it to and by what time frame, and we'll figure out the rail to get it there. Right. And then, of course, when we get to the actions component, that could be ACH, that could be tokenized deposits, right? It could be whatever we decide. But at least when you're in the payments area or in the fraud area, you understand what we're trying to do from a strategy component, and you can connect it to an objective, and you can connect it to our context, the why. So you know why we're doing it, you know what we're trying to do. And now we're figuring out how best to go about doing it.
So I started by asking about kind of setting the strategic priorities, right? Do the strategic priorities kind of fill the context, objective, and strategy phases of this, while the actions are the recommendations from the leaders that come in, those 122 requests that come in? Are those representative of the actions, or are you going even further to say this is the action, right? If you've got to replace a system, provide extra training, a new resource for staff to be able to use, let us know to help fulfill that action.
So the priorities are squarely in the objective bucket.
Gotcha. Okay.
And they're associated with quantifiable goals and metrics,
Mm-hmm.
right? So, for example, we want to be 45 billion in assets by 2029, right? And so it's a bit aspirational, but
Yep.
that's the vision, right?
Yep.
And so, and I think it's intentional to make it a bit of a stretch, but not break,
Right.
right? And so you want people to start to think a little differently. And so to envision a world where we're 45 billion in assets, you're like, oh wow, you're like, wow, oh, interesting.
I was just a big credit union,
Right. But that's the same internally. And start thinking, okay, well, what needs to happen for us to be able to get to that? What does that world look like if we are serving 2 million members? And we say in California because that's where we're chartered, but our members, our members clearly have lived here at some point, but we have members in Texas and New York and
all over the country.
Right. Yep. I was in Italy once and I saw somebody take out the debit card to pay for something at the Coliseum. And so our members are quite everywhere. Yes.
Did you run over and thank him for being a member? I
did. No, I let him know that I was a member. I didn't say that I worked there because that leads to a whole nother conversation. But it starts a different type of thinking and a different type of conversation, which is what we want, right? Because we like to say at SchoolsFirst, it's a great organization, but we never want to rest on our laurels. Right. We want to always be pushing the envelope when it comes to how best to serve our members. We want to be anticipating member needs as well as school districts and university needs, so that, we want to be skating to where the puck is going, not to where it is currently. And so you can only get there by consistently talking about what the future should look like, make sure everybody understands the dynamics of that future. And so then they can start to think differently around, okay, well, what does that mean from a strategy perspective?
Right.
But to answer your second part of your question, once we've had these discussions on strategy that are based on our priorities, yes, the actions is what's submitted by everyone, including myself, right? Yeah. There's no fast track for me or for Jose or Bill or anybody in leadership. Everybody
Bill's got a fast track. Right? Bill's got a fast track. He's the CEO.
Everybody goes through the same process. Every idea goes through the same process.
That's good discipline. Really good discipline.
Because it's never about one idea being great. It's around how does this idea or this investment opportunity, because it's an investment, whether of time or money or whatever, versus all the other investment opportunities. Right. And so typically, to your point, if Bill is making a comment, it's because he's hearing it a lot from members. Right. Bill's just trying to make sure he's echoing what he's hearing when he talks to university presidents and district, superintendents and things of that nature. And so if members are asking for it, it would score well in our scoring mechanism, right? That's how it works. Our methodology is centered around our member. And so, but it doesn't just skip the line. It still has to.
He doesn't get a golden vote.
Right. There's no golden ticket. But I will say we don't just make decisions based on the numbers. Right. The executive team has final say after another group has dug through all the details. They make a recommendation to the executive team. Clearly builds on the executive team. So if we want to make an adjustment to something, or if we see something that's strategically important that this group didn't surface, of course that can be added. Right.
Are you guys gaining board alignment at the strategic priority level?
Absolutely. Yeah. So we try to keep the board aligned with our context, what's going on, what are members doing, what's going on with the competition. We clearly, we feel like they're responsible for setting the objectives of the organization and making sure the goals are appropriate, right? And that's kind of where we kind of live with them, right? When it comes to strategy, we thought it's more of a management's role. But if it's a shift in strategy, a change in strategy, of course, we walk the board through the why. Why are we going to go from, channel of choice strategy to a digital only strategy. We would never do that, but if we were, we would have that conversation, the why with the board, and make sure that they understand and they're comfortable with that, right? They're ultimately responsible for this organization. And we are blessed to have a great relationship with our board and open, transparent conversations. It's been fantastic.
Okay, very cool. You're in the planning process now. You talked about we just finished up the first phase of it. Talk a little bit about kind of what the planning, what does the overall framework look like for the planning process? I mean, you've talked about how you set the strategic priorities and the goals, but what does the calendar look like for your planning process?
Yeah. So as I mentioned before, we were going through a major transition. So I won't speak to the calendar piece because we're not in that steady state yet. But I'll tell you what our intention is.
Okay.
We want to set our strategic priorities for the upcoming year as soon as possible. So in the steady state, let's say we enter to 2026, it's January 2026, we want to have already identified what our strategic priorities are for 2027.
Wow.
Yeah. So that early, right? And the reason for that is that is the North Star for the ideation process. And we have product owners, we have channel stewards, and this allows them to go through their individual process of developing strategy using that same framework that I just shared with you. But then we bring them together as a group to figure out, okay, well, you know what you want to do at the product level or at the channel level. What do we need to do at the enterprise level? Right. So, say you have, 10 product owners and channel stewards, and they all have 10 ideas what they want to do next year. That's 100 ideas. But, reasonably, you can only get to 15.
Right.
And so we bring them together to have the lively debate, conversation, strategic alignment, review and challenge. And everything they're doing should be centered around the strategic priorities.
Right.
They should be trying to fill those service gaps we talked about, or those enduring financial strength needs that we're trying to make sure we have, so it can be around for another 91 years. Those are the things that they're debating. So that takes care of the products and the channels. That's a very small group of very talented leaders that tackle that. Separate from that, we have other work types. We have infrastructure and compliance. We have the innovation bucket. We have operational efficiency. And then we have strategic differentiation, which primarily is in the product and channel space. And so that's open to everybody to submit. And this is, you're trying to make sure the servers are staying on, right? You're doing upgrades in a timely manner. You're addressing the regulatory issues that are coming up. So all those things are also being submitted, and they're part of that intake process. We like for all that to be done by June.
Wow.
And the reason why is the budget process goes from July to September.
That's right.
And so if you don't have an idea of what you want to do before the end of September, now your planning and your budgeting process are misaligned.
Yeah.
So if we can finish everything by June, and by the way, when you submit something to our process, you're including the financials, right? And we ask you for the level of confidence that you have, right? So something that has already gone through contract negotiation should have a high level of confidence. Things that are just ideas that you're considering, we still want the financials, but they could be back of the envelope. But you tell us in the form that you fill out what the level of confidence is.
Okay.
And so that allows us to make informed decisions on, do we place you in the innovation portfolio, or are you ready for implementation, or should we put this on the shelf for consideration in a future planning cycle? Right. So you walk into the budget with at least an idea of the initiatives that you want to invest in and how much they're going to cost. You go through your budget cycle. Of course, changes will occur throughout that. Then hopefully you enter into October, November with a really clear plan for the next year's annual operating plan.
So what that makes me think about, Kevin, is that this is a year-round job. I mean, obviously you're employed, right? Well, and you've got a whole team,
Right.
right? Like that's the thing that in some places it's like, executives will draw the short straw and be like, oh, I've got to lead the planning exercise, or it
Oh,
falls to the CFO if it's particularly financially heavy, right? Or it might
God.
fall to the CIO or something else, right? This isn't a part-time job. This is something that has to be methodical, that has to be thought out, that has to be reported on, because you're probably reporting on not just 20. Here's what our goals were for 2026. Here's how we're doing on those goals from a metrics perspective, and then here's our report on the process for 2027 as we're going forward. Like all of that's got to happen at the same time, and there are deliverables every single month from a planning perspective.
100%. 100%.
Okay.
And there's discussions every single month, right? So, we've tried to draw the line between, senior vice presidents should be focused on strategy in the future. Our managers should be focused on executing what the plan is for the here and now, and managing the team. And vice presidents kind of straddle the line between both.
Right.
And so we're constantly, from a strategy perspective, having conversations and, alignment, realignment, disagreements on how best to go about prioritizing self-service empowerment opportunities, money movement opportunities.
Right.
There's so many things within that discussion to consider. And emerging technologies, we have to educate ourselves on those emerging technologies. We have to educate ourselves on the regulatory environment. The fintech space and financial services space is fast moving. We have to keep abreast of what's going on, and all that can impact your strategy discussion, right?
Yeah.
To your point, we haven't gotten to it yet, but you have to make distinctions between what's a clear driver versus what's a signal, and that's noise.
Right.
So those are the discussions you're having on a regular basis, right?
Yeah.
And trying to keep the leaders from different operational functions on a common knowledge foundation is difficult, right? Because if you're a lending leader, you may be going to lending conferences and you're on boards where you of lending organizations, but now AI is more of a generalist and can be applied in multiple use cases. You have to make sure that lending person has the same working knowledge of that as the membership development leader. And
that's part of the role in your organization. That's part of the role of the strategic planning group, is to ensure that everybody's got that same basic level of understanding.
We're trying. Yeah, absolutely.
Yeah.
And
that's very cool.
If nothing else, create the space for them to talk to each other.
Right.
Right. So they can share what they're learning, right? It doesn't have to be a tell to them. It can just be a platform where they're talking to each other. I heard about this and they heard about something different, but you see it's based on the same emerging technology. And then it's like, oh, okay, we need a single platform that allows us to do this, not two different platforms.
Yeah. Yeah. Very cool. I am interested in the discussion around signals and noise as it relates to creating and understanding the context of what's happening out there, right? But talk to me a little bit about the difference between the two.
Oh, yeah. So there's there's drivers, and then there's signals, and then there's noise. So a driver is, I'll just call it a sustained trend, right? So a driver would be a mobile adoption in our society, right? Screen time. Like it is driving behavior. It is how people engage. It is here to stay until it gets supplanted by something else, right? So you have to account for that in your planning. A signal can be thought of as it could become a driver or it might not become a driver. But you see glimmers of it in fast adoption, or you see glimmers in it with folks who are kind of on the fringe and the early acceptance of new technology. Crypto might be considered to be a signal. You're not sure if it's going to revamp the entire banking industry, but it could if it became a driver like mobile. And so you want to keep a pulse and understanding of what signals are out there, because they can quickly, as we see in our world, go from, just people like you and I using it to now 50% of America using it, right? ChatGPT, right?
Yeah.
I can quickly be adopted. And then noise is just the distraction of the moment. I'm trying to think of what could be considered noise. I don't pay attention to it, so maybe that's why I can't think of a great example right now.
Right.
And I don't want to get political. So, but it's something that,
I mean, it could be that the political environment could be noise.
There might be a hype cycle around something.
Yeah.
Everybody's so upset or they're so worried, but it's not really a thing. It just doesn't have really any legs yet. But for some reason, it's made the news cycle, and now everybody.
So I'll put you on the spot. Of those three, where is AI right now?
So AI is a driver now. I think 2 years ago it would have been a signal, but AI is a driver, and I'll even get more specific. I would think what the signal is now would be AI agentic workflow integration.
Yes.
Right. Yeah. So the whole AI thing, I mean, the cat's out of the bag. That's here, right? I use it before I do searches now, right? Mm-hmm. I confirm with it my assumptions or to complement my ideation process. It is a great tool. I recommend everybody leverage it. Now, how do you leverage AI in actual workflows of a business? People are saying, oh, they're doing this, they're doing that. Those companies are like 15 people. But when it comes to large organizations, you have to put some real thought into that. Yeah. And I think, and is it embedded in platforms yet that are enterprise ready? And I mean, companies that have 10,000 plus people in them. Mm-hmm. I'm not sure that it's there yet, but I think it's clearly on its way. And I think we need to understand how agents work. And again, I'm not referring to robotic process agents. Those are here.
Yeah, right?
But they just do what you tell them to do.
Right.
Gen AI agents can do more than what you told them to do. Yeah. Right. Yeah. They may come up with something that you weren't thinking of. Right. And so to build that into your workflow is a challenge. But something that clearly has a lot of power, a lot of potential, and can be a little scary.
Mm-hmm. Yeah. The long-term effects of it can be for sure. I
don't even know about long-term. Kris. I think I just heard yesterday Microsoft just let go 4% of staff. And you hear little bits and pieces of that throughout the last 12 months. They're not major layoffs, but some people attribute this to the adoption of Gen AI.
Yeah, I certainly think it's making the job market very different right now. Yeah. Right. If you're somebody who creates something, who analyzes something, who produces something, which is in some cases, or at least in the past, been white collar work, right? Like that is firmly in the crosshairs for AI, right? And
do you ever
go ahead?
There's a podcast, and I don't know if it's okay to mention another podcast on your podcast.
Of course, it is.
Diary of a CEO. Mm-hmm. You ever heard of that?
Yeah,
I listened to it last night, and the godfather of AI, I don't remember his name. I apologize, but he asked him if you were somebody worried about AI right now, what kind of career would you adopt or go into? He said, learn how to become a plumber. Yeah. That he was saying that, you got AI can't replace what a plumber does. Right? No. And plumbers get paid quite well, maybe contrary to popular understanding.
Somebody asked me the same question, not on a podcast as great as that one. I mean, here, pretty good. But somebody asked me the same question the other day, and I said electrician. Right. I said, because AI requires massive amounts of electricity, and the United States is so far behind in its electrical production, right, and what it can do. I mean, that's why we're having brownouts and blackouts and things like that are happening. Like it's because we can't keep up with, from a generation perspective, the amount of electricity necessary that AI is going to demand and consume in these data centers, right? So be an
And we're just
electrician,
getting
kids.
started.
Right, exactly.
Right.
Exactly. Sure. What should, and this is a good, what should, if they're not already, what should credit union boards and leaders be talking about during their strategic planning processes this year?
So we've already talked about, I guess, well, one, it depends on your credit union.
Sure. Okay.
Right? So, somebody once told me if you met one credit union, you met one credit union.
Mm-hmm.
So I'm not sure there's
Jeff Klein told us both that.
Yeah. But, shout out to Jeff Klein and his retirement. I'm not sure everybody has the same context.
Mm-hmm.
Right. So, like, for example, with SchoolsFirst, there's a great deal of member engagement and payments, as I mentioned earlier.
Mm-hmm. Right.
Maybe another credit union doesn't have that challenge, right? Maybe they just primarily do lending and deposits, but they don't actually, have an active debit portfolio. So it really depends on your credit union.
Yeah.
I'm gonna skip over. I wrote a couple of things down because I knew you were going to ask me this question around money movement, AI, agentic workflows. I think everybody has to deal with fraud right now, whether that be fraud in the payment space or cyber attacks when people call in to impersonate people or attack your employee base through social engineering. I think fraud is being accelerated by artificial intelligence. If I was a bad actor before and I was doing everything manually, now I can use the same agentic workflows that we just talked about.
Exactly. Now you're a 10x bad guy.
Right. Yeah. I'm way more productive from a fraud perspective, and all I need is one to get through. Right. Yeah. I think we all have to talk about the increasing level of competition within our space, and it's not just other credit unions and banks. It's Fintechs, but it's also just big tech, right? So this conversation around tokenized deposits and stablecoin is an opportunity for cheaper payments to be moved and faster, instant effect. It's also a major threat to banking as we know it. If you don't understand that, you should definitely be talking about that this year.
Yeah.
That at minimum is a signal. That is not noise. That is a signal that could end up being just really great for our operations, or could really drastically change how banking works in this country.
Yeah.
So I definitely think you have to be having that discussion. Some things that I wrote down that may not be super obvious is the erosion of trust in institutions. And I think that why that's important in part for credit unions is our entire history has been based on developing trust with our membership. And that stood out 50 years ago, and I think it stands out even more today if there's eroding trust, whether it be from the government or for companies that are driven strictly by a profit motive. I really think that credit unions need to be of high integrity and focused on what the individual member needs more now than ever. I think that's super important. And also there's an increasing level of loneliness in our society, which is probably in part driven by the hyper personalization of what AI can do and what you can do on your phone and the echo chamber of news that we can all get, right? We can all just get our news feed as opposed to reading the actual news in its entirety.
Yep.
And so I think that creates a challenge for society, but I think you have to consider that in your context as a credit union, because of course you want to meet members where they are, but you don't want to contribute to the isolation of people, which I think some of this adoption of technology is leading towards. I don't know about you or others. We've seen an increase of poor member and sometimes non-member behavior in branches to the point where it's almost dangerous sometimes.
Wow.
And so, of course, you have to handle that, use all your legal means to address those things. But I think our society seems more separated than ever. So our ability to see each other as just people, as humans, is really important. And I think credit unions started by people to serve people have in our DNA the ability to at least be a counterwind in this current trend that we're seeing.
Yeah. That's really thoughtful, Kevin, and I think it's right on the money. Credit unions have a trusted place in our communities for now,
right?
And I think that they can leverage that trust to build connections, not just between they and their members, right, for the purpose of extracting business or providing business. I shouldn't say extracting; that's the banks. But it's about and even community banks can do this too, right? They can establish the opportunity for people to build networks again, right? That are made of diverse people
in the real world as well as in the digital world.
Yeah. Right, exactly. That is very. It's lacking greatly, right? I was having a conversation with somebody the other day, and they were talking about some problems they're having with a child of theirs, and they aren't even themselves in this online world, right? They're some other name, some other thing, some other, you know what I mean? And it's like, how can you truly be connected to anything that isn't representative of you? Right. And so I think that's where there's an opportunity for credit unions to create that realism, that connection between people, right? By creating opportunities to do that. It's very, very thoughtful. And I think that that would be a great goal for credit unions to be able to do.
And if I can end with one item that I think is super important, at least for us.
Yeah.
So again, you met one credit union, you met one. What we're focused on is going from what we call segmented journeys to integrated journeys. So I'm pretty confident that every financial institution, credit union or bank or community bank, you can join online, you can get a loan online, you could, create a new deposit account, all those individual journeys.
Yes.
What we need to be focused on, particularly as credit unions, is in that digital space, making it easier for a member to participate in what they're going to need, and we're anticipating their needs. So you join a credit union for a reason. So in their joining, can they also apply for and fund the car? Do you have are you allowing them to do direct deposit right there in just, 2 clicks?
Yeah.
Right. Can they download their debit card digitally and get to spending right now if they wanted to? That's the integrated journey that we need to be considering and thinking about, because the expectations of younger generations who are digitally native is being shaped by fintechs, and their entire design is based on the user experience.
Yeah.
And so they quite literally see what banks and credit unions do and what they lack, and they attack that. That's how we get PayPal and Zelle, right? And all these things, because it was too difficult to transfer money to somebody.
Yeah.
So like, just use your phone number, right? That's super simple and easy.
Yeah.
So we need to be more scrutinizing of where our experiences have too much friction, don't anticipate needs, require a human intervention, and we're calling that integrated journeys. And we think it's a great way to anticipate needs in the digital space, similar to what our team members do when you call or visit them in a branch.
Right. Yeah, financial institutions of all shapes and sizes are competing against companies like Chime and others whose app is the product.
Right.
Right. So it's not a checking account here is a product, and that's separate from the savings account over here, which is a product, separate from the loan over here, which is a product. Like the app is the product.
Yeah.
Right. And they can make changes to it gradually and increase what it does over time. So, Kevin, I really appreciate it. If somebody is interested in finding out more about what you're doing or reaching out to you to consult and ask you about what's happening in the world, how can somebody get a hold of you?
You know, the best way to reach out to me is on LinkedIn.
There you go.
I'm pretty active on LinkedIn. You reach out to me there, and I will respond to you. So I look forward to hearing from you, and I'll be glad to answer your questions.
Awesome. Kevin Martin, Schools First. Thank you very much, my friend. Great to see you.
You as well, Kris. Thank you for having me, and I look forward to our next conversation.
That's right. That's right. Kevin, thank you very much for joining us. You are one of my favorite guests to have on here. If you guys like the content, please like and subscribe on your platform of choice. And don't forget to check out the extra content we post to our LinkedIn site. Thank you very much for watching. We will see you next time.